All right, I'm just going to shoot a couple of videos back to back, and I just shot one for 1-800 Pet Meds, and this one I'll do on Crocs. So I'm just working from memory here, but Crocs, I had a position and earnings came out, and then the price dropped, and now I've been adding more. So it looked like a decent company at 10 times earnings, and now that it's trading at 8 times earnings, it looks like a steal. So I don't mind adding more. So what is so interesting about Crocs? Crocs makes the shoes that everybody knows, very ugly shoes, but people that are in occupations like nurses or waiters that you do a lot of walking, they tend to love these shoes. I have two pair, and then when they wear out, I buy two more pair, and then they wear out, I buy two more pair. So it's almost like I have a subscription to Crocs, and they're not fashionable, but they are comfortable. So I love to wear mine to the gym and back when I do jujitsu, and it's very comfortable. So what is good about Crocs and what is bad about Crocs? The thing I don't like about Crocs is they bought a company called Hey Dude, which makes fashionable menswear. And I thought it was a terrible idea, but they wanted to get into this other business, and it was a growing brand, and I think they overpaid. And last quarter, turns out that sales of Hey Dude dropped like 17%. So rather than growing, they're shrinking, and that caused the stock price to tank. But again, now you're getting it at a little under 8 times earnings, so it's really cheap, and I think they're throwing out the baby with the bathwater. So at less than 8 times earnings, one, you get a company that has no debt, and two, even though Hey Dude, which they overpaid for, and I think is wasted money, even though that dropped 17%, the company as a whole is still growing about 5% a year, and they think that's sustainable. So you're getting a company at 8 times earnings that is not only not shrinking, but it's growing. So it's growing at about 5% a year for the whole company. And sales in the US were not great. I think they were down like 2 or 3%, if I recall correctly. But in Europe, they were growing. So in Europe, they're growing like double digits, and they didn't have a big presence in Europe. But if you're growing double digits there, um, and you hadn't been there before, that seems like a good driver. So you're getting a company, no debt, less than 8 times earnings, growing 5% a year, and new markets like Europe are opening up for them. What about knockoffs or competition from China or things like that? So if you go on Amazon and you search for Crocs and then do sort by price, high to low, or sort by price, low to high, you'll see that you can buy Crocs anywhere from $20 to $200. Um, Not exaggerating at all. Just when you get off this video, go ahead and do that. So from $20 to $200, you can buy Crocs. So if you were a competitor who wants to make imitation Crocs because you think $200 Crocs are ridiculous, and I can injection mold some plastic and undercut these guys. They're already undercutting themselves. So if you can buy real Crocs for 20 or imitation Crocs for 15, are you really going to take a chance on that? Maybe if you were in a store and you're trying out different shoes and they felt the same, you would do it. But if you're ordering online, anything from 20 to $200, you've got the whole area covered. And it's a well-known brand. It's hard for you to compete with that. And there's also other ways to make money. So I have a nephew, and he's very into the movie Cars, and he used to buy those little things that you stick on the Crocs, and he wouldn't take the shoes off. They had to wait till he was asleep because he wouldn't take the shoes off. So those little widgets that you put on, I don't know what they're called. Different companies can sell those for Crocs and license them. So Star Wars, Disney, whatever, and Crocs can sell those, and it's extra money for them. And as I said, I do think Hey Dude is a mistake. They hired somebody to turn that around, and if that does well, that's a free option. It's just a lottery ticket. But I think just the core brand itself, Crocs is a recognizable brand. People know it. You don't have to advertise for it. You don't have to sell a cheaper version to get somebody to try your brand because everyone has tried Crocs. Everyone knows it. And the people that use it, when they wear out, they just buy another one. If I have running shoes that are Nike and they wear out and I go to the sneaker store, I might try different brands to see which ones feel good and jog with a different brand. But with Crocs, I seem to see the same people buying it over and over again, and it doesn't seem like it's a fad that comes and goes. It just seems like the same people that buy it keep buying it, and as I said, if they're growing overseas, new markets, then that's going to work out for you. And at this price, less than 8 times earnings, no debt, it's pretty hard to go wrong with that. So to me, it seems like a no-brainer, but the market seems to disagree. So I don't mind adding more at these prices. And I did buy it initially. I think it was like a 120, so it was trading at like 10 times earnings, and now it's trading at 8 times earnings. So I'm been buying it like 100 to 105. And what I may do before the end of the year is just buy a bunch more at the current price and then sell the higher cost shares so that I'll still have like a 1 or 2% position, but I'll overweight it and then sell the higher cost shares so I can get the tax deduction from selling the higher cost shares and then keep the lower cost shares. But if you do that, you sort of have to wait 30 days. So there's the wash sale rule. So you can't just sell stock at a loss and then buy back the same stocks for tax purposes. There's like a 30-day wait. So you can either sell the shares now, get the tax loss, and then buy it back in 30 days, or just buy more shares, hold on them for 30 days and then sell the higher cost shares. But just in terms of minimizing my taxes, but it's not something uh, that is based on value. It's more of just tax consideration. So if the shares that I have in my retirement account, I'll leave, but for the shares in my taxable account, I may just do a little accounting trick like that to minimize my taxes. But anyway, that's my thoughts on Crocs. It's not a big position, 1%. And as I said, I may just buy a chunk more and hold it for 30 days and then sell for tax purposes. But at this price, yeah, I feel good about it. So it first came up to my attention when it was in the 80s, and I sort of passed on it because I didn't think the Hey Do thing was a good idea. And then the more I studied it, you know, it seemed like a great company, and it, yeah. So I took a small position, then it went down, and I don't mind buying more. I think it's got room to go, and at in this market, a lot of stuff is overpriced, so it's hard to find bargains. And this isn't a no-brainer, but if you have 1 or 2% position on a lot of these, which are good companies that are temporarily depressed, I think you'll do all right. So that's my thought on this, and it's not a recommendation to buy or sell. It's just me keeping track of my process and my thoughts contemporaneously. And if you have any thoughts on this, especially if you think I'm wrong, just leave it in the comments, because uh, I do find that helpful if somebody brings up something I haven't thought about, because I don't want to just have people agree with me and create an echo chamber. I think it's better for your process if people bring up blind spots or things you're not thinking about. So anyway, this is the second video I've shot today, so I may have time for one more before I have to uh, go do something today. But hope you guys enjoyed it, and happy Thanksgiving.